earnings. What would you say were key highlights or key takeaways for you from this report?
Yeah, thank you so very much. I think CBN has used the opportunity to talk to the other pillars of the economy, respectively, talking about the fiscal harm of economy and also the trade harm of economy. CBN had noted that we just emerged from recession and the economy had grown at some point at 1.9, which now at the end of the second quarter went to 1.5. Inflation has also been reducing simply because of what is responsible for that is the CBN interest rate. That is the interest rate that is adopted by the MPC, which is called the NPR, that is the monetary policy rate. So, and it's also one that the government, this time the legislature and executive, may need to come together so that budget is released as at when due. As at the date this report covered, June 2018, 2018 budget has not even been signed, let alone been implemented. So you could see a lot of gap, there's no enough cash flow in the system, while CBN is still carrying out its OMO in order for inflation to come down. MPC set NPR at, that's monetary policy rate, at 14%. 14% NPR is the main reason why we have substantial increase in our foreign reserve, and also why we have falling inflation. If that report had extended further, would have showed us what happened 2 months ago, that inflation is coming down. But that is not yet in the report because it only covered between January to June. And they also talked about jobs, unemployment perhaps may be holding sway now everywhere across sector in the country. He also told us about what is happening to oil, etc., why we're experiencing increase in crude oil prices globally. What we export as of the date captured may not still be more than 1.7 million barrels per day as against 2.3 that was budgeted for. Also talked about slightly about what FARC is sharing and what we should expect local, the state level to have more in terms of high GR. So summarizing all of these is that we still need to do more in order for economy to improve. As we speak, the GDP rate is nosediving, and CBN warned very well. It has warned that we should be careful so that we don't go back into recession. And that is the worry for me.
Paul, if I could just come in here. Now, we know that when there is synergy between the monetary authorities and the fiscal authorities, the economy no doubt will benefit. But it doesn't appear that the fiscal authorities have exactly held up to their own side of the bargain. And I imagine that this has made the task of the monetary authorities a lot more difficult. What are your thoughts in terms of how the CBN can, or the MPC, the CBN, can continue to manage the economy, manage its mandates? And also because what we've seen in the last couple of years is the CBN coming up with a number of interventions into the economy to help prop up, especially the labor-intensive sectors, something that, should come from the fiscal authorities. What are your thoughts in terms of how the CBN has been playing that role to, on the one hand, keep its mandate, and on the other hand, coming up with all kinds of intervention schemes?
Yeah, the goal of CBN is very clear. It is exchange rate stability and price stability. And that is why you have high interest rate. With high interest rate, Nigeria is able to compete in terms of inflow into the country. Of course, that will come with joblessness. That will crowd out private sector. It is a function of fiscal harm to spend as at when due, and to monies that are borrowed should be executed. The processes might be too long for us to have the impact of this money as at when due. So on one side, when you want to achieve, see, the way economy works, economics have trade-off. If you have positive on one side, most of the time it generates negative, and I'll explain that. If you're trying to reduce inflation on the side, it might lead to unemployment. If you're achieving growth, it will be creating jobs, but it might be creating inflation. So you might not have your cake and eat it. It might not be possible totally, but you need to put policy in place so that you can achieve both of the effect you want to generate together. So it's a lot of concern, but that is clearly documented in the report, and perhaps suggestions were also made as to what government could do, which are lending our voices to. That government, as a people, government should take action in terms of spending money as at when and improving business environment, because the private sector that we put people to work.
Now, Paul, one of the bright spots in the report is the FX market and how the CBN throughout the year has been able to provide enough or robust FX supply to the market and, of course, keeping it stable. What are your thoughts in terms of how much longer you think the CBN can keep this up, especially since we now have multiple rates, catering to different segments of the market?
Yeah, the goal of the Apex Bank, from what I study, is to see exchange rates converge at the import-export window. The parallel market is trying to target a particular range. I guess the CBN is currently using 305 as the official rate, but the import-export exchange and what we have at, say, parallel market is between 360 to 365. But you see, we seems to be having a lot of intervention from CBN, and CBN has also gone to China to exchange renminbi for nairas against using the dollar. But so much of the impact has not reflected on prices locally, and so much of the impact has not also reflected on exchange rates, because there is an algorithm, whether you spend CD or you spend yuan or you spend renminbi, whichever currency. Here we have not solved the problem, which takes us now to trade policy. I've spoken about fiscal policy. What we consume from abroad is just too much. We need to create alternative for people at home. So CBN is, we keep intervening in the market and keep providing cushion, supplying form, but that may not be the best for Naira, because you can see what is actually happening to foreign reserve now is going down closer to 40 billion US dollar, about 41, 42 billion US dollars, which was not the case in some months ago. But the reality is that we need to provide alternative export promotion, import substitution, and these CBN officials cannot do themselves. This they need to advise government, for government of the day or government to come to do the needful by reducing marginal propensity to import. If it still increases, the truth is we'll still have to be going in cycle without really moving anywhere.